Hello, and thank you for joining today's session on TTI's Corporate Tax Continuity Worksheet. My name is Jay Goodis, and I'm the CEO and co-founder of Tax Templates, Inc. The goal of today is to walk through this worksheet in some relative detail. I'm expecting it'll take about 10 to 15 minutes. And if you have any questions, please feel free to use the Q&A, and I'll look to answer them during the session. If it's a more complex question, happy to get back to you right afterwards. Okay, so with that, let's jump right in. So let's start with what's the purpose of the Corporate Tax Continuity Worksheet. This worksheet is meant when we want to reconcile amounts from the financial statements, the tax return, and the prior year notice of assessment, and to use this in our everyday files to complete our compliance worksheet, our compliance activities for the tax file. Okay, so as a reminder, this worksheet has a lot of the features you would see in other worksheets, such as where you see the color yellow, it means we need to do something. You'll see that we have our completion guide, which will take us step by step through the entire worksheet. And we also have some buttons at the top of the worksheet, similar to many worksheets in the tax planning collection. Simple will be for your more generic scenarios. Standard will be where we have situations such as dividend refunds and refundable taxes. And standard and shred includes where we have shred amounts. All right, so why don't we go ahead and walk through a very simple scenario for this worksheet. So I'll use our completion guide to walk us through, and step number one is to put in the name of the client. So let's say we're doing this for OPCO, and we're going to do it for our current tax year, and I'm going to put in our year end. Let's assume this is a client that we're working on now, maybe with a July 31st, 2021 year end. Okay. Once I put in the year end, the next step is going to be to put in the opening receivable payable balances from the financial statements. Again, you'll see a note at the very top that will give us some indication about what it is we need to do. So if we're completing a July 31st, 2021 financial statements and tax return for a client, we're probably looking at the 2020 financial statements and tax returns in order to make sure everything was reconciled. Do we have an over accrual, under accrual, things of that nature? So let's keep it easy, and let's assume that we have a client from 2020 that had a $20,000 payable. You will notice in the titles that when it's a receivable or a payable, the amount that we need to put in a negative amount will be in brackets. So since I have a $20,000 payable, I have put the $20,000 as negative. Okay. All right, so once that's been filled in, we can fill in additional years, but for now, let's keep it at just July 2020. The next step is to enter the details directly from the NOA. And all we have to do is select NOA from the drop-down menu along with the year end we're completing. The reason you're seeing multiple year ends here is, as I'll show you shortly, there could be situations where we're doing multiple year ends at once because there's multiple NOAs, reassessments, loss carrybacks, and so on. The worksheet handles all that. But for now, we're looking at the 2020 notice of assessment. So I'll choose assessment from the drop-down menu. There is an event date, and this is very simply just to put in the date of the notice of assessment to help our record keeping. So let's assume we received it on November 15th, 2020. The next step is we are going to fill in the numbers directly from the notice of assessment. So we're going to keep it easy and assume that we've got some federal taxes along with some provincial taxes. Now, if we look at the scenario we've built here, we have an opening balance from the financial statements of a payable of $20,000. But from the notice of assessment, we've only included 17. Oh, I'm sorry, I made an error in my input there. I'm going to make it 7,000, not 70,000. And in this case, we have $17,000 of payable. So in this case, we would expect that we have an over accrual of $3,000. And if I scroll down below, you're going to see the automated journal entry calculating that $3,000 over accrual. So that will be done automatically regardless of what amounts that we put in directly from the notice of assessment. Now there's two key sections here I also want to highlight here, and that is our interest and penalty section. Sometimes when we have an NOA, there could be interest that's charged. So let's assume that our client was charged $500 of interest. So I'll put in $500. When that happens, if you look down below, you will notice again that the journal entry is automatically going to update for us regarding that interest and penalties expense. However, what if we have a client who is quite astute and knew that that interest and penalties needs to be booked to that income expense account for interest? Well, this yellow cell is where we're going to put in the amount already journalized by the client. So if the client already put in the $500 themselves, I can just hit enter and you will see the journal entry will be updated to reflect that fact. All right, so we've gone ahead. We've got the opening year end here, $20,000 payable. There was only $17,000 from the NOA. We provided the journal entry, and then we'll move on to our next step, which is payments and refunds. So here's where we can include the amount of payments and refunds for the year. We give you the full calculation to see where the balances came from. So we started with the 20,000. We've got our change to the account by 3,000 because of the over accrual. And then we have the $500 in interest that we need to pay. So as we would expect, we owe the government $17,500. If the client has paid that amount, we can just go ahead and enter in the amount that they paid, and that will bring our final balance down to zero. If it was less or if it was more, you will see an ending balance here that will be reflected for us to reconcile later. All right, well, at this point, we have now fully reconciled what happened in 2020, and we can now move on to the current year tax provision. And here in the current year tax provision, we can go ahead and enter in the amounts directly from the tax return. Now, this is a very simplified section because we are in the simple mode, but if I hit standard or shred, we will see more information. So let's assume for this scenario that our client in 2021 had a $25,000 payable. I'll enter in the $25,000, and similar to before, we are now going to see a journal entry down below for the current year provision of the amount booked to the provision and the amount booked to the payable account. Now, oftentimes clients throughout the year are going to be paying installments. And you'll notice that we have two lines for installments, and they are separated strategically between installments paid before July 31st and payments after July 31st. And that's important because we need this to agree to our balance sheet, and cash paid after the year end is still going to be put on the tax return. However, it is not going to be captured in the balance sheet the same way. So if our client perhaps paid some installments before and some installments after, we can include them. And when we do, if I scroll back down below, when we get to our financial statement integration, it is going to properly capture what our final balances should be on our balance sheet and our income statement. And that pretty much takes us through how to use the corporate tax continuity worksheet. So if I were to summarize what we've done, for the file, I put in the year end of the corporation. I will then go ahead and put in the opening receivable or payable balance. That will come from our financial statements. The next step is I'm going to take the notice of assessment and enter in the amounts directly from the notice of assessment. The worksheet will then automatically generate a journal entry for me to book into our records. Next step, we're going to include the amount paid by our client for the years. So we have the ending balance for that specific year. And that reconciles the prior year. And then for the current year, again, we're just going to go ahead and enter in the amounts directly from the corporate tax return. And at the very bottom, you will see we have a journal entry and balances that are going to agree directly to our financial statements, such as our income tax receivable, our provision, and in this case, our interest and penalties. All right, perfect. So now let me walk you through a few other key components of this worksheet, including scenarios where we might have a reassessment. Well, first off, I want to talk about these journalized tax receivable items at the very top and what they're for. So an example where this might apply is, let's assume that maybe our client is being audited in 2018, but the audit is not yet complete, and we've gone ahead and we've booked a payable for, say, $100,000 for a potential audit result. Well, we can put in that $100,000 into the worksheet, and I can use these unrealized events to say, look, this is still pending. I don't want it to impact my final results for the year. So effectively, we're backing it out of our calculations. But the reason we still want to include it up here is if I jump back down into our section here where we have our reconciliation of balances, we still want to see that $100,000 year-end balance for 2018 as a result of the audit provision that we booked. Now, similar to an audit provision, but we could also have a situation where a refund was held back. Perhaps we have a client that we've already filed 2018 and we're waiting for a refund, but they're not providing it back to us, maybe because the HST return hasn't been filed. So again, this is where we can include those unpaid amounts. So not very common situations, but when they apply, they're very easy to work with directly in the solution. Now let's assume that we have a situation where we have a reassessment. Well, to use the reassessment, what we're going to do is click the standard tab here. And when I do, you're going to see a new section populate right here between the assessment section and the notes and calc. So let's go ahead and hit our standard button, and we will see the new section arise. And this is really useful. And I think it's going to impact a lot of clients as a result of the financial world we've been in the last year and a half, and how many clients were affected who might have had some losses for 2020. And then they're looking to carry back those losses to 2019, 2018, 2017, and so on. So if you're working on a file, you've got the current year assessment for 2020, but maybe there's multiple other reassessments. So what we can do is we can put all of them directly in the worksheet. So let's go ahead and say we've got a client with a 2019 year end. From the drop-down menu, we'll choose reassessment. And then what we're able to do is put in the amounts from the current reassessment and then the amounts from the prior reassessment. And when we do that, the journal entry will again automatically update for the difference. So let's assume that maybe the new reassessment as a result of the carryback, that our client only has to pay $1,000 of federal tax. I've got a yellow cell down below. And in this case, perhaps originally they had to pay $8,000 in corporate tax. What you'll notice is that our journal entry updated for the delta of $7,000 as a result. So in the worksheet, you can go ahead and put in as many of these reassessments that apply, even if you have multiple reassessments for the same year, such as 2019. Again, you always just want to make sure you use the most current assessment on top and the most recent reassessment immediately below. Another thing you may have noticed when I hit the standard button is we have these buttons here for refundable taxes, dividend refunds, and other taxable credits excluding shred. And this is important because sometimes when we're booking the transactions, we may have already booked things correctly to things such as the dividend refund. So let's assume that our client in 2020 had a dividend refund. So I'm going to include a $3,000 amount there. In the journal entry, you'll see that we've separated the dividend refund appropriately for sakes of the journal entry. However, if we've already booked that correctly, or we booked some portion of that, we can just go ahead and put in the amount that we booked to our financial statements. And if we've done that correctly, you'll see the amount is $0. However, if the numbers were a little bit different than expected, again, don't worry, the worksheet's journal entry will automatically pick up that delta, which in this case is $800. Now, if I scroll back down, I want to show you how that when we're in the reconciliation of prior year balances, we are going to show you the ending balance for each year. And this is important because when we're trying to follow multiple years at once, it can be quite tricky. So by showing the final balances on a year-by-year basis, this allows us to reconcile all the final amounts directly to those years as we track them in our balance sheet. In the current year provision section, when I hit the standard, you are able to see the refundable, the part 1, and the dividend refund. Again, all these amounts are here for us, so we can include them directly from the T2 return. We have provided the line items over on the left side to make them very easy to enter. And the final section I want to talk about below is our taxes receivable payable section. So oftentimes, if our client has to do a loss carryback, we're going to want to book what that expected perhaps receivable might be, or changes to the dividend refund balances. This is the section that we can do it. So let's say, for example, we went ahead and we're expecting a tax receivable from 2019. You can choose what the type of adjustment is from the drop-down menu, non-capital loss, or another adjustment. Let's go ahead and do that. And then we'll put in the amount we expect the receivable to do. Now, in this case, we've heard from our clients that the easiest way for them to calculate this number is to open up the old tax return, bring in what the amount carrybacks will be, and when they put in an amount, they'll figure out what the change to the receivable or payable will be for that particular year. So once you've done that exercise, you can put directly into the worksheet what you expect that amount to be. And again, what our worksheet will do, the journal entry will update, all the final financial statement integration, final numbers will update. And at the very top here, again, all those numbers will flow through. So our ending balances are what they need to be. If you are a client who is operating with clients out of Alberta, we do have a separate Alberta tab. And the reason we have the separate Alberta tab is because Alberta has separated their completion separate from the federal notice assessments. We have federal NOA and Alberta NOA. So you can just use 2 tabs for those scenarios. And for clients that are looking to do shred, well, you can just click the shred button, and it is very comparable to what we've done now. The big difference is we need you to select from the drop-down menu here which province that you are working with in order to do your shred claim. All right, so as a final recap, we put in our year end for our file. So we're doing the 2021 file. We can then put in our 2020 numbers from our financial statements, put in all the amounts directly from the assessments or reassessments provided by the government. We will provide you with the journal entry that you can book into your systems. You can put in the amounts paid directly for the clients. And then down below, book the current year provision, do any loss carrybacks or other adjustments. And then again, you've got the second journal entry to book for the current year provision, and then all the integration. I find the financial statement integration very helpful, and we have a similar feature in Simplified or Quick and Safe Income and SUSE and many of our worksheets to make sure everything aligns nicely to the client's records. It's another set of control for our clients. All right, so as promised, I was trying to keep this relatively quick, so about 15 minutes here, but I will stick around if there are any questions, or if you jump off now and you have any questions when you jump into it for a file, please don't hesitate to send us an email. My email is jay@taxtemplates.ca, or you can email any of my colleagues at support@taxtemplates.ca. So thank you very much. Have yourselves a great day, and I'll stick around for a few minutes of questions.